Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Salma Alisha Sahdiya, with NPM 234122046, from Accounting Class 23A, Course Business Law. Here, I will explain the material about business entities in business activities and their assistants. Definition of business entity. A business entity is an organizational unit that carries out production and/or service activities to generate profit, and has a specific management structure, assets, and legal responsibilities. In business law, a business entity is viewed as a legal entity that can own assets, enter into contracts, sue, and be sued. Types of business entities in business activities. A. Unincorporated business entities. 1. Sole proprietorship. A sole proprietorship is a business owned by one person without any separation of personal and business assets. The owner is fully responsible for all debts and business risks. This form is simple, easy to establish, and suitable for small businesses. Because decisions are made by one person, management is faster, but the financial risk is borne entirely by the owner. 2. Civil partnership. A civil partnership is a partnership between two or more people who pool capital, goods, or labor to achieve mutual profit. This form is unincorporated, and the partner's liability is generally limited to their contributions. Matchshap is widely used by professionals, such as doctors, accountants, and consultants, because it emphasizes expertise-based collaboration and proportional profit sharing. 3. Firma. A firm is a partnership established by two or more people under a joint name. All partners have the authority to act on behalf of the company and are jointly and severally liable for all company debts. This form requires a high level of trust between partners. While risky due to unlimited liability, a firm offers flexibility in management and the ability to pool capital. 4. Limited partnership, CV, is a business entity consisting of active partners and passive partners. Active partners manage the business and assume full responsibility, while passive partners contribute capital and are liable only to the extent of their contributions. This form is flexible and often used by medium-sized businesses because it allows for a combination of managers and investors. The establishment process is simple, without the requirements of a PT. B. Legal entities. 1. Limited liability company, PT. A PT is a legal entity that separates the company's assets from its owners. Capital is divided into shares, and shareholders are only liable for the value of their shares. A PT has a formal structure, consisting of a general meeting of shareholders, GMS, a board of directors, and a board of commissioners. This form is suitable for large businesses because it can raise significant capital, offers strong legal protection, and offers high sustainability. 2. Cooperatives. Cooperatives are business entities based on the principle of family and aim to improve the welfare of their members. They are managed democratically through the principle of one member, one vote. Profits are called SHU, shares of profit, and are distributed according to contributions. Cooperatives can operate in various sectors, such as services, trade, or savings and loans. The goal is not simply profit, but the collective economic empowerment of their members. 3. State-owned enterprises, BUMN. BUMN are business entities whose capital is wholly or partially owned by the state. They consist of public service-oriented PIRMs, public corporations, and profit-oriented PERSERO. BUMs play a strategic role in important sectors such as energy, transportation, and finance. Their management must be professional and transparent because they serve the interests of the state and the wider community. 4. Foundations. Foundations are legal entities engaged in social, educational, humanitarian, or religious activities. Although not intended to make a profit, foundations can operate businesses to support their social activities, as long as the profits are not distributed to the management. Foundations have separate assets and can enter into contracts. Many foundations operate schools, hospitals, or social institutions under strict regulations. Functions of business entities in business activities. 1. Legality of business activities. A business entity provides a clear legal form for conducting transactions. 2. Facilitates investor attracting. Investors have more confidence in a well-organized PT or cooperative. 3. Legal protection. With a PT, shareholders only bear the risk of their capital. 4. Operational efficiency. With a clear structure, businesses are easier to manage. 5. Public accountability and responsibility. Especially for PT/TBKs, which are required to report their performance transparently. Assistant in business entity activities. A. Internal corporate assistance. 1. Board of Directors. Tasked to manage the company, conduct business activities, and represent the PT both inside and outside the courts. The Board of Directors' responsibilities include fiduciary duty, good faith, duty of care and skill, prudence, and responsibility for losses in the event of negligence. 2. Board of Commissioners. Functions as supervisors and advisors to the Board of Directors. They do not manage operations but are responsible for negligence in their supervision. 3. GMS, General Meeting of Shareholders. The highest authority in the PT, determines major policies, appointment of directors/commissioners, amendments to the Articles of Association. 4. Employees and workforce. Are the operational implementers. Regulated in the Manpower Law and Company Regulations/PKB. Includes finance, marketing, HR, administrative staff, technicians, and supervisors. B. External business assistance. 1. Notary. Function, drafting authentic deeds such as deeds of establishment of PT, FA, CV, cooperation agreements, amendments to Articles of Association. Plays a crucial role in legal matters. 2. Legal consultant, lawyer. Provides legal opinions, drafts contracts, handles disputes, manages business permits, and mitigates legal risks. 3. Public accountant, auditor. Conducts audits of financial statements to ensure the reliability of information. Plays a crucial role in transparency, credibility, and access to capital. 4. Tax consultant. Assists in calculating tax obligations, filing tax returns, and resolving tax disputes. 5. Financing institutions/banks. Provide working capital, investment credit, bank guarantees, and export-import LCs. 6. Distributors, suppliers, and agents. Assist in the distribution of goods, the provision of raw materials, and product marketing. 7. Government agencies, OJK, BKPM, Kemenkemen. Regulatory assistance in matters such as company establishment permits, financial transaction supervision, and investment permits. Legal relationship between business entities and their subsidiaries. Legal relationships between a business entity and its employees can be formed through various types of agreements, depending on the roles and responsibilities of each party in the business. An employment agreement applies to employees who work under the direction of the company and are entitled to rights such as wages, reasonable working hours, leave, and employment protections as stipulated by law. Meanwhile, an agency relationship applies to parties such as agents, brokers, or commissioners who are authorized to act on behalf of the company, so that all their actions are the responsibility of the principal as long as they remain within the mandate. For certain operational needs, companies can establish partnerships or outsourcing relationships, namely cooperation with other companies that provide services such as security, cleaning, or other support services, thus creating a legal relationship between the companies. On the other hand, companies also work with experts through professional relationships, such as notaries, public accountants, or legal consultants, who provide services based on specific expertise in exchange for a service fee, without the subordination relationship that exists in an employment agreement. Thus, each legal relationship has different characteristics, objectives, and responsibilities according to business needs. The important role of business entities in business activities. 1.as a legal subject that is legitimate to conduct business transactions. 2. Economic drivers, providing goods and services. 3. Job creation through workforce recruitment. 4. Investment recipients who drive business growth. 5. Taxpayers who support national development. 6. Domestic and international traders. Legal responsibility in business entities. Legal liability within a business entity encompasses civil, criminal, and administrative obligations that must be met in carrying out business activities. Civil liability arises when a breach of contract or default occurs that results in losses. Criminal liability arises when the business entity or its management commits crimes such as fraud, corruption, or money laundering. Meanwhile, administrative liability relates to compliance with business permits, taxation, financial reporting, and government regulations. The extent of liability can vary depending on the form of business entity. For example, a limited liability company, PT, has limited liability, while certain firms and limited partnerships, CV, have unlimited liability for their partners. Stages of establishing a business entity. 1. Business planning, type of business, capital, risks. 2. Preparation of the deed of establishment by a notary. 3. Approval and registration with the Ministry of Law and Human Rights, for PTs only. 4. Business licensing through the OSS NIB, commercial permit. 5. Tax registration, company taxpayer identification number. 6. Opening a company account. 7. Preparation of standard operating procedures, SOPs, and organizational structure. Sources of funding for business entities. Business funding sources come from various mechanisms used by companies to meet operational and expansion capital needs, both internally and externally. Internal funding typically comes from retained earnings, which are profits not distributed to shareholders and reallocated to business activities. Meanwhile, external funding can be obtained through bank loans, bond issuances, additional capital through new investors, or the sale of shares to the public for publicly traded companies. Additionally, companies can utilize alternative financing options such as leasing, venture capital, crowdfunding, and financing from non-bank institutions. Each funding source has different legal consequences, capital costs, and risk levels, so businesses must choose the type of funding that best suits their business needs and financial capabilities. Business ethics in business operations. Business ethics in business operations is a set of moral principles and standards of behavior that must be applied in every company activity to ensure that business activities are conducted honestly, transparently, and responsibly. This ethics encompasses compliance with the law, respect for employee rights, non-deceptive marketing practices, consumer protection, and a commitment to environmental sustainability. Furthermore, business ethics requires companies to avoid corrupt practices, conflicts of interest, monopolies that harm the market, and unfair treatment of business partners. Internally, business ethics also regulates a healthy, professional, and discrimination-free work culture. By consistently implementing business ethics, companies can build a good reputation, increase public trust, and create harmonious long-term relationships with all stakeholders. Conclusion. Business entities are important legal entities in economic activity because they have the ability to conduct business activities in an organized manner. In business law, business entities are divided into incorporated and unincorporated, each with different characteristics, responsibilities, and organizational structures. To carry out business activities effectively, business entities require the assistance of internal parties such as employees, managers, and directors, as well as external parties such as agents, notaries, banks, legal consultants, and distributors. The relationship between a business entity and its assistants is always based on an agreement that gives rise to legal rights and obligations. That's all I can say about the material business entities in business activities and their assistants. Wassalamu alaikum warahmatullahi wabarakatuh.